Happy New Year, everyone. We're excited to start this 2023 SEAC schedule by providing lots of valuable information from our CalPERS team. I'm Susan Four, and along with William Greenhold and David Bettino, we're going to be your guests this morning. This event is being recorded. For closed captioning, please click on the subtitles button, and there's also a link in the chat. Next slide, please. We do have a few housekeeping items. As I mentioned, this event is being recorded and it's going to be available on the CalPERS website next week. All attendees' mics are muted today. Our meeting materials are available at the CalPERS SEAC webpage, but if you have any problems locating that, go ahead and send us an email to the SEAC mailbox, and then we'll get those materials over to you. That email is calpers_SEAC@calpers.ca.gov. Next slide, please. So there'll be time for questions and answers after each presenter, and also again at the roundtable at the end of the webinar. In addition to submitting your questions in the Q&A box, you can use that raise hand feature by clicking the raise hand icon that's at the bottom of your screen. Our host will unmute your mic so you can ask your question, and then after your question is answered, please mute your mic again. Next slide, please. We have an outstanding panel of CalPERS leaders and team members this morning. Christina Rollins will provide updates from the Social Security Administrator team, as well as the post-retirement employment. Ryan Beaker, AKA Birthday Boy, happy birthday, Ryan, is here to let us know what's new in supports in our system support regarding automated permanent separation and Cognos reports. After Ryan, we're going to take a 10-minute break. Next slide, please. After the break, Brad Hansen will give us a compensation update. Paul Sheeta has information on your projected contribution rates. John Hensley will update us on billing for late payroll and correction admin fees. Stephanie Duncan has some great information on school employer training opportunities. And finally, our Chief of the Employer Account Management Division, Renee Ostrander, along with Brad and Christina, they'll lead us in the Q&A after all the presentations. So with that, if Christina is ready, we can go to Christina. Otherwise, we'll start with Ryan. Christina, are you available?
Yep, I'm here.
Cool. Next slide. There you go.
Okay. Good morning, everybody. Welcome to the SEAC. I don't have any slides. I'm just going to do quick updates for my two areas. So I'll give an update on what's going on Social Security Administrator team. And then the next slide, I'll be going over the post-retirement employment, working after retirement, the membership side, and give a quick update there. So for Social Security, not too many updates. I don't know if you guys remember, but back in 2019, we sent a circular letter out that stated that our state Social Security Administrator team would be charging employers fees for the administration of the Social Security Administrator team. And that fee was to cover our work, which is, collecting annual information requests, determining coverage for Social Security from your employers, and obviously answering any questions or issues that come up. So that fee was waived last year. And that fee, if you remember, it was based on the number of employees you had at your agency. And we assessed the fee and you were given that and then paid it through an invoice. But anyways, that fee will not be assessed this year. So there will be no Social Security Administrator fees collected for this year. And the second update I have with that is that the team is working on letters to send to the county offices of education. And what they're going to do is they're going to write down all the modifications that each school employer, that the school employers have. And that'll be a good tool for you to use when you're determining coverage for your employees that are subject to Social Security. specifically, which will help a lot with the rehired annuitants, which I know has been an issue in the last few years. So the team is working on that. And those letters we should anticipate should come out within the next couple of months or so. So that hopefully that will help you. And obviously, as we get closer, we'll provide more information for that and be available to answer any questions. Give the next slide, please. Oh, are there any questions about the fees or the letters we're going to send out? Okay, now we can move on to the post-retirement employment and membership updates.
It looked like there were two hands raised.
Oh, I'm sorry. Okay, I just can't see. Oh, Susan, I can't hear you. I'm sorry.
Hi, Christina.
Oh, hi.
Hi, good to see you.
You too.
My first question about, I think I only have one,
Okay.
is that when you are talking about you will be sending us a letter about the retirees,
No,
you know how
no,
we have hard time telling whether they should pay Social Security or not. And then when we submit the information to your office, they look at it, whether what kind of position they have, and then they make a determination.
no, so that letters won't specifically cover rehired annuitants. What the letter will show is, so the schools have section 218 agreement, but there are modifications made to that agreement, which allow or disallow certain coverage for different employees, different groups. So with the letter that we're going to be providing is just going to say what the modifications are, and it'll be like a tool that the employers can use to determine if their certain employees, classifications, positions should be covered under Social Security. I just brought up specifically the rehired annuitants because I know that that has been an ongoing issue. But that the listing the modifications and determining, the coverage that who should be included should help you make those determinations yourself at your agency.
So we can still send those those employees' information to your office?
Yes, you
to
can.
make sure? Okay, thank
Yes.
you. Thank
Yes,
you.
thanks, Vina. Okay, are there any other questions?
Nope, that's it for now.
Awesome. Okay, so post-retirement employment, working after retirement updates. So you guys have probably seen at this point or heard that in the working after retirement arena, we are creating or have created regulations to define what limited duration is. So retired annuitants can work in a government code 21224 position, extra help positions. So I know a lot of you utilize these positions when you need extra help. There's a backlog at the school. There's an immediate need for a retiree who has specialized skills to come back and work. And right now there's been confusion, like over, since the statute has been there, that, well, what is limited duration? And we would get asked that a lot. What is limited duration? How do you define it? Like, so limited duration to some people can be 10 years. For others, it's like, okay, well, this work is ongoing. We always have it. So, it can just continue on. So the regulations that we have created are going to limit the amount of time that a retired annuitant can work in this extra help, these extra help positions under Government Code Section 21224. So what it does is retired annuitants can work in an appointment, a retired annuitant appointment for 2 years. So you enter the appointment, they work for 2 years. They're still subject to all the working after retirement rules, the 960, so forth. At the end of the 2 years, the employer can request an extension for that retired annuitant. They can request a 1-year extension at that point. And that they'll have to provide information why they still need the retired annuitant, what kind of succession planning or knowledge transfer is happening to move that retiree out of that position. And they'll have to provide, like I said, a lot of information on why they still need that retired annuitant. At the end of that first year, which will actually be the third year that that person is working, they can request one more extension. So they can request up to 2 extensions for that retired annuitant appointment after that first 2-year period. And so for that second extension, they will again have to provide the information that they still need the retired annuitant and justify why they still need that retired annuitant in that position. The 4 years, that's it. So the retired annuitant should be done after the 4-year period. They've moved on, and you've hired somebody else, or you've hired a permanent person in the position, whatever it is. We will allow in very, very rare cases extensions for retired annuitants. So at the end of that 4 years, if you want to request an extension, an exemption, you will have to justify to our board, again, why you need the position. It'll be more difficult. The information that you provide will be more complex than to request the extension. And at that point, if you are approved for an exemption, the retired annuitant can work up to 120 hours per fiscal year. And that would have to, they would have to keep renewing that, or they can work indefinitely, but that will still have to go to our board as well. So those are really what the regulations are defining for retired annuitants. In addition to that, we've created the regs. The regs have gone, you guys have probably commented on them. They've gone to the board a couple times. We're doing our final reading of them February at the board meeting, and we're hoping to have those implemented. I mean, granted, it has to go through the Office of Administrative Law. And once we go through that, we're hoping that they will be implemented either in the summer and the fall. So that's just in a nutshell what the limited duration regs define. And there's information out on our website. I can provide the link after I finish talking. I can provide that link to you guys where you can find out more information about the limited duration regs, and you can read through those as well. And there will be a part which I can't touch on because it's Brad's area, but there is a piece in that regulation about temporary upgrade pay as well. But I'm not sure how much that affects the schools, but there are 2 pieces of that, but the main part of the regulation will be the limited duration for defining limited duration for retired annuitants. Vina, I see you have a question.
Yes. I wanted to know, whenever you send this information, once all this is finalized, those retirees who have been working last 5 years, 3 years, 10 years, you're going to also provide us directions how to go about them who
Yes.
are already working?
Yes. So the ones that are already working, once we implement the regs and the day that it's implemented, they will be subject, they will start that 2-year period at that point.
Okay.
So if they worked previously, they kind of get a little pass. So it'll start over for them for the 2 years.
Okay, thank you.
Christina, I think we have one more question.
Okay.
Nia, is that how you pronounce your name? Do you still have a question? I know we answered one in chat.
Oh, I haven't checked the answer yet, so that's fine. Yeah.
Okay.
I
Okay.
don't have any.
Well, if it doesn't get answered, I'll be here. I'll be here all day, all morning at least. So let me know.
Thank you.
Okay, and that's all I have. So thank you guys, and I'm sure I'll be talking to you guys soon.
Okay,
All
Ray.
right. Oh, thank you. Good morning, everyone. My name is Ryan Beaker, and I'll be speaking on behalf of the CalPERS system support team today. So just a few housekeeping things before I get into this presentation. If you see any communication from Erica Sanchez, she's our new manager of the CalPERS system support team. We're extremely lucky to have her. She's bringing tons of managerial knowledge and technical know-how, not just to EMD, but we are extremely lucky enterprise-wide to have Erica. So just a heads up on that. And then for me, I'm moving over to the membership review team. So if you have any communication from me, now I'll be focusing on the membership review team, looking at those formula and tier issues, arrears, things like that. So just a heads up on that moving forward. But today I wanted to focus on the automated permanent separations. I'm going to explain what it is, what the process is, some new enhancements that you should be utilizing with our new update coming out in March. And then at the end of this presentation, I'm just going to touch on a few Cognos reports, some edits that we made to existing Cognos reports, some new Cognos reports, and some existing Cognos reports you could run to help you identify those permanent separations that were automated. So next slide, please. All right, so what is the automated permanent separation? So this has been in place for almost 3 years now. And there's 3 main scenarios where we'll go in and retroactively separate someone's retirement appointment. So the first one's pretty basic, no payroll ever. If you enroll a member and you haven't reported payroll for 6 months, 6 consecutive months, I should say, we'll go in and separate that person 1 day after their initial start date. That doesn't mean they qualified for membership, they weren't getting paid. We just want to make sure that we're properly separating those people so they're not going to pop up on your RAR or you get late fees for that person.
Sham, what are you talking about, Gabriela? Oh, I will tell them to come on.
All right, and then moving on to the next scenario, we'll also retroactively separate our retired members with active appointments. So there's a misconception out there where it's CalPERS' responsibility to maybe key a permanent separation for someone who retired that have filed a retirement application with us. That is the responsibility of the employer. So what we find is a lot of times you might have members who are retired, they're floating out there, but they're not technically permanently separated. So in that scenario, we work with our retirement unit to make sure they're being separated in a timely manner. Again, that should go 1 day after their last day on pay. Now, the most common scenario, and probably the most common for schools, would be the no payroll for 6 consecutive months. So this is a big one. So if we have an active employee and they don't have pay for 6 consecutive months, we'll go into the system and we'll automatically separate that person, going back retroactively to the 1 day after their last day on pay. This is something that schools especially need to watch out for because it can impact, substitute teachers especially, who might only work a couple weeks in the year or something of that nature. I'll kind of get into a little bit more in depth why that's an issue with our substitutes, but that's a slide down the road. So I just want to touch on too, simply confirming unposted payroll is not going to stop our process. So that confirm unposted payroll was always meant to be a temporary solution for payroll reporting. It was never to have long-lasting impacts to retirement appointments and things like that. So just be aware, if you're actively confirming unposted payroll to avoid those late fees, that's not going to stop that process from happening. So next, I'll touch on the exclusions. So the exclusions currently right now, if a member is on a leave of absence, with that though, I should specify a leave of absence if it's open-ended, meaning there's not a leave keyed into the system. So let's say the leave of absence starts February 1st. We are going to let that person exist on the leave for the initial 6 months, and then 6 months after that, if the leave of absence hasn't been updated, then we'll separate that person. How you can circumvent that is pitting in an end date to the leave of absence. So let's say you have somebody who is starting a leave of absence today. You could key an end date for February 1st, 2024, and this person won't be picked up for the entirety of their leave of absence. Keying those end leaves can always be adjusted after the fact. They can be deleted, they can be moved. So that's one thing to kind of be aware of. If you know someone's going to be out for 8 months, go ahead and key the end leave. That's going to make everything work a lot better in the background as far as billing, fees, that kind of thing. It's going to stop this process. And then let's say at the end of that 8 months, if that person wanted to extend it for another 4 months, you could just go in and adjust that end date to be the whole year as opposed to the 8 months. The other exclusion is our non-contributory appointments. So mainly our retired annuitants, they're not going to be targeted in this separation process or any other non-contributory appointments. Next slide, please. So here's a way of viewing an automated separation in my CalPERS. So this is for Harry Potter with the Ministry of Magic, so it's not a real account. But you'll see at the bottom there with that red arrow, we have a last refresh date. So if it's internally someone in your COE or possibly the school district, it would list their name. If it's CalPERS staff, it would just say CalPERS. It's not going to list R. Beaker. But if it's an automated process, you'll see there's a little code there. That's for us to identify the batch process and things like that. So if you see the last refresh by, and you might not know what that is, you could always call the contact center. What happens in the background is that we update their account kind of in the notes. So if you call in and say, hey, what happened to Harry Potter? I'm not seeing that he's active. We'll have a list of notes that says this person was separated for this reason. So if there's any questions with that, that's how you could identify those. I'll touch on kind of some different things that you could pull up in Cognos Report to help identify that, but there's several resources at your disposal that can help you assist identify who those people are, how they're being targeted and things like that. Next slide, please. So why does this really impact substitute teachers the most? Another automated process that we have is anytime a separation is keyed into my CalPERS, the member is going to receive an options separation letter. That letter specifies you could keep your funds on deposit, or you could refund those contributions that you have on deposit. Those are really basically the two options there. What ends up happening and what I've seen happen so far is that you might have a substitute teacher who might be active in your internal system, right? They're caught in the automated permanent separation process. And then they'll apply for a refund, and it could be a possible illegal refund. So in those specific situations, we've been really proactive in contacting the COE and the school district to get confirmation if this person is active or should they be separated both on your internal system and in my CalPERS. So the thing that we want to stop is the illegal refunds for those people who, like let's say every 8 months, they're substitute teaching, something like that. The last thing we want to do is saying, hey, you're active and you receive a refund. That is technically illegal. So next, I'll kind of touch on the preventative steps. The easiest solution would be the report zero payroll for those members. Again, simply confirming unposted payroll won't stop that from happening. The only way that stops that from happening is reporting zero payroll. As a plus, it will also prevent you the need to confirm unposted payroll. I know that's an additional step. I know there's several steps you have to follow when you're reporting payroll. So We have the functionality to accept both manual and XML upload. If you do send us a zero payroll file, you don't have to do that additional step by confirming as well. And then when you do report the zero payroll, you could still go in and complete an adjustment for that member. So let's say, you know, you're reporting for someone and you're doing the zero payroll, so they're not being picked up in this process. And then months later, you actually realized, oh, we forgot to report this person for the month of December. You could still totally go in and report those contributions as an adjustment. Again, the last preventative step are those termed leave of absences. So not the open-ended, but the ones that are closed. So if you have a situation where someone's taking 1 year for maternity leave, if you key the begin and the end date, it won't be picked up for that entire process, and it won't be picked up for any other billing process in my CalPERS. Next slide, please. So next, I have a couple of resources listed here that should help identify those populations based on the scenarios that I previously covered. The business partner info report, participant appointment details report, and the business partner on leave report. Those are all going to give you information of, you know, the person's name, the CalPERS ID, what school district they're at. And also, you know, if their begin leave is open-ended or if there's no end date keyed as of yet. So I highly recommend getting in the habit of running those reports just so the people who shouldn't be targeted aren't being picked up in that process. I wanted to specify, you know, we've worked with several school districts, several COEs, and we send reports directly to those COEs that show those people that we separated. So as of March, the 10.7 update to my CalPERS will actually notify the employer, hey, we have separations. And it's just going to be a generic letter. That letter is just going to let you know that separations have been keyed. It's not going to list their names, their CalPERS IDs. We know and we understand that you receive several letters from CalPERS on a daily basis. So it's just one notifying you, hey, you have people that were separated as part of that process. And then what you can do in that letter will specify, you could run a Cognos report that will show those separations for you. So again, since it's a monthly process, this is coming out mid to late March. As of April, you should be regularly running those and scheduling those reports to be ran so you know who's being identified. Also, what's kind of cool about this enhancement is that we'll identify who has unposted pay for 3 months. So that should give you a notification, hey, this person hasn't had paid for 3 months. You know, if you know it's a 6-month window, it's kind of letting you know, hey, something needs to happen with this person within the next 3 months. If not, they could be separated. Lastly, I want to touch on something that we have blanket approval for. So for the months of January, February, and March, until this enhancement goes in, you could email the employer technical support inbox. And we could send you a list of everybody who's been separated as part of this process. And it's going to be a pretty basic list. It's just going to list the CalPERS IDs, the names, the school districts that we're working at, and the separation date that was keyed. So we could send that data to you. Please reach out. We always work on a first come, first served basis. So it can take, I think it's 3 business days to hear back, but we'll send you an encrypted file and then we'll call you for the password. That being said, if you reach out, you have to be a CalPERS contact with the COE or the charter school if they're independent to receive those files from us. And you also have to have either the retirement enrollment or the payroll, and both. The read-only option is fine since you're not technically keying anything. As long as you have those assigned roles, we'll be able to send you that data. So any questions, any concerns, if you want that list, please go ahead and email. And I also need to specify, you know, that's only for the last few months up until April. As of April, you'll be able to go in and run that report manually. So you wouldn't need to reach out to us anymore. So after April, we won't be sending that list anymore just because it's a long process and we want to make sure the data is being sent securely and accurately to the correct person. The last part of my presentation is really touching on the Cognos. So before I kind of move on to the Cognos area, is there any questions about this automated permanent separation process?
Yes, Ryan, we have a couple raised hands.
Sure.
Yeah, go ahead.
Hi, this is Veena again. I just wanted to know, wherever you mention employer will be notified in your enhancement,
Mhm.
do you mean each division, like each district will be notified if they have anything where a person is separated?
It should
Because
just,
it comes a
yeah.
lot of work on the county office with all these things just coming to the county.
Mhm.
So when you automate the process, it should go all the way to the district so they know who got separated and all.
Yeah, I'll have to double check the hierarchy. I know with the COEs especially, you know, it's CC to the district, but I could definitely double check and email and let you know what I find out.
Okay, we have a question from Lisa Dills. Lisa, go ahead. All right. Go. Question?
Oh, I have the same question at Diva or Avi. So is that been answered? Thank you.
All right, thank you.
Yeah, and I
Okay.
saw one in the chat that someone had asked a question if we could update those options at separation letter to only include refund information. Unfortunately, we can't, just because the member does have the option to keep their funds on deposit. And I'm not a numbers guy, but I think you earn like 6% or 7% on that amount. And then, you know, like 20 years down the road, if you want to retire or refund then you can do it. So just because you separate doesn't mean you automatically have to refund. You could keep your funds on deposit, or if you're vested and you're of retirement age, you could always decide to retire, you know, years down the road. So that's why we can't just specify, hey, refund, because there's actually two other options that are available to the member, and it's really the member's discretion which one they choose. So I hope that answered one of the QAs, and I'll kind of monitor those as the SEAC presentation goes on. So I'll be messaging you directly. If you have any questions for me, feel free to include that in the Q&A, and I'll respond to those as well. So with that, can we move on to the next slide, please? Awesome. So I'm going to cover a few updates to some payroll Cognos reports. I know a lot of COEs and school districts have been asking for these updates for quite some time, so I'll be touching on that. And then we have some new Cognos reports that may be beneficial to our school districts, including a new disability determinations report, and then a new pre-processing report that can be ran on the page for our COEs who do an XML file upload for retirement enrollment. Next slide, please. So we made these updates to the existing payroll Cognos reports. So for the BP CalPERS ID and payroll report name, we added to the report header. We added special compensation category and special compensation type to the contribution detail report and the contribution posted detail report. Spanning retroactive salary adjustments and retroactive special compensation adjustment transactions will show as individual records in the contribution detail report. And then the 1959 survivor contribution member paid additional contributions, employer paid additional contributions, and total hours work columns will now be movable in the contribution detail and contribution posted detail report. So what does that mean? Basically, we're trying to make it easier for you to audit the existing payroll that has been reporting for the previous year or the current. So we're just trying to make it easier that you could go in and reconcile and do audits and things of that nature. Some of those columns will be movable. So we're just trying to enhance that functionality within the CalPERS system. So be on the lookout for that. And then we have a few new Cognos report, or I should say one new Cognos report and a new Cognos adjacent report. So we have a disability determinations report. I know a lot of you would call the contact center, the employer contact center, and ask, hey, where are we at within this disability determination? You know, it would involve the employer contact center doing some research, digging into accounts and things like that. So now you should be able to pull this report, and it should give you an indication of what's going on within that determination process. The second part there, we have a new retirement pre-processing errors report. This one is housed on the pre-processing screens itself, so it's not in the main Cognos folder, just because it's a little confusing. It only exists if you're an XML file uploader. So if you do a manual entry, it's not going to pertain to you, but it's really there to help you know, hey, these people errored out. And what's dangerous about that is those members kind of hang out in limbo where, you know, especially if they're new members, they're not technically in CalPERS yet, but they're kind of in our system waiting to be worked. So a lot of times it might be, you know, you're enrolling someone with a maiden name, and we might already have that information because they might be married to a dependent in CalPERS, right? So if it's like a name, maiden name, maybe it's somebody matches with a social security number and a name, but their date of birth is off, things like that. Those could error out. So that report's really there to assist you. Hey, you need to target and identify these people that erred out, and you need to work them in a timely basis, because we don't want to have like arrears situations or late enrollment fees for the retirement file. So it's a good FYI. Hey, if this got accepted, I'm going to run this report to see who erred out when. Lastly, I always touch on the reminders, other Cognos reports that you could run. We regularly encouraged, you know, to stay on top of the retirement appointment reconciliation process. There's some new enhancements coming out with that as well. Just more than anything like background, but it's a good FYI for the schools. So we're trying to clean up a lot of the permanent separation issues that are automated with the RAR. So you might have seen if someone shows up on your billing because you go in and delete that permanent separation, they might pop up on billing. So after March, we're kind of connecting the two in the background to kind of clean out those automated permanent separations, making sure that process is speaking to our financials process and the billing process. So we won't have to do so many fee waiver requests and things like that. Do we have any questions regarding any of the Cognos report information I covered so far?
Yes, we do. Ramona, go ahead.
So Ryan, my question is actually back on the separations, the automatic separations that CalPERS is doing.
Sure.
If there is no payroll reported for the 6 months.
Mhm.
If the employer removes that separation date because the person is now working and needs to be reported, is there a negative consequence for that? Like a late reporting fee, or because now there would be all of these payrolls where there is no payroll reported?
As of right now, there is a minor issue, and it's really how things are processed. We have batch processes that run like daily, at the end of the week, monthly, and things like that. So what we're seeing now is that if it's a timing issue, depending on the time of the month that you delete that permanent separation, and you post payroll especially, what ends up happening is that we'll pick up the last 6 months that we're expecting payroll. So we've identified that issue. We've been working with employers that come up. We have a list in the technical support area that we regularly waive fees. We coordinate with FINO, but the enhancement in March, it's going to stop that. So we're kind of matching up when that separation process happens to when the billing batch process happens. So it should be on the same day. So what should happen, like let's say someone's separated today, you go in and delete that permanent separation. As of current day, if you don't report for the upcoming month, it's going to reseparate that person. In March, what's going to happen is that you get 6 months. So 6 months, that person's separated, you delete that separation, then you get an additional 6 months. So that's kind of how that plays out. It was just a weird timing issue that we weren't made aware of until recently. So we're enhancing the system to kind of catch the weird bumps along the road. So if you happen to see, where, hey, this person, I deleted their separation, we're getting billed, please reach out to us. We have ways that we could find out, when the batch process ran, who it picked up and things like that. So we'll be able to identify it until that enhancement goes in. And then that enhancement in March is going to fix that process.
Okay, and then I had a second question.
Sure.
And this one is regarding Cognos.
Okay.
So when we submit and post our file,
Mhm.
and then we use the summary to get our detail,
Mhm.
the detail is inaccurate now. That's been since December. Is there any resolution in sight? Last I heard, CalPERS was aware and working on it, but where are we at?
Yeah, I know that we were made aware. I don't know, Cynthia or Carlos.
I could speak to that. Sorry to
Thank you.
interrupt. Hello, everybody. So yeah, we are aware of the issue. We've identified it. It looks like it's going to be fixed in early March, the first weekend of March. And if any employers need to request a report due date extension for January earned period reports, we'll accept that up to March 4th so you can utilize your new Cognos report. So it should be fixed the first weekend of March.
Thank you, Brad.
You are welcome.
Okay, we have a question from Bina.
I am just adding this, what Ramona just shared, that we originally instructed our districts to remove the separation date whenever PERS processes this automatic separation date. We started receiving invoices. One was like, let's say 15,000 because they were in that district for a million years like me. So what I wanted to bring it to your attention is districts don't really have that kind of time to always monitor. Some of them are just paying fees because it's 500, 1,000 without even knowing what's going on. They cannot really understand how your system works. So I just wanted to make sure that maybe if there is a better way of handling this, because that was the easiest way to remove. Now we are trying to create a new date to enter in PERS system so we don't get billed just to satisfy your system.
Yeah, so part of that situation too, as I mentioned, it's like a timing issue. So like, let's say, you got a sub, they were targeted for that permanent separation process that was automated. I know a lot of times you have different people do different things. So you might tell your retirement person, hey, go in and delete that permanent separation. And what we've seen, if they post payroll, then they kind of get picked up again. So as of March, we're identifying that situation. But if you do have any invoices or any things like that, please feel free to reach out to employer technical support. We could go in, just include, the invoice number, and we could kind of look at the CIDs. There's a way you could go in and look at who keyed what when. So we should have all that information. Just send us that file whenever you get a chance.
I mean, I understand we can do this.
Mhm.
The problem is that it takes a lot of time with all this process
Mhm.
to really figure out what happened. My point is that is this still, no matter 6 months, 8 months, doesn't matter. Whenever PERS separated somebody, if we remove that separation date, you are saying going forward, it will not create an invoice?
As of March, correct, yeah,
It won't, right?
correct.
Okay, is that a promise?
I would say with a high degree, I mean, we can't say 100% sure because we haven't started that testing cycle yet, but I know it's been built into the system. I'll coordinate with the system support team to make sure we're testing that accurately. I can't say with 100% certainty anything's going to work if we don't go through that testing. So we want to get through that testing, but so far the signs are promising.
I'm just kidding.
Okay.
Just kidding. And second part, which Ramona just talked about, is about not having accurate number
Mhm.
to make the payments because of all these enhancements that happen at PERS end. It is very important to us, and I know Ramona already shared and used, and Brad said we will have time, that extension and all, because if we massage our data here to make sure we meet PERS requirement, and it's very important for us to have a timely number and be able to see what we owe PERS, because sometimes we lose a lot of time, 3 days, 5 days, meeting your threshold, making sure the numbers matches how much we owe. I'm just saying it's becoming very difficult to balance
Mm.
and make the payment and clear the report. And you guys are really very quick generating invoices.
Yeah, the invoices are automated, so we don't have, a maniacal CalPERS person issuing those. It's all based on a batch process, but I'd be happy, Vina, you and I can meet and kind of just like talk
Okay,
about
thank you.
next
you.
phases, because I think we have a break
Thank you.
coming up. But yeah, I think our break is only 5 minutes late. But I
Thank you.
think, yeah, definitely.
Welcome back, everyone. We can get started again. Brad, you have the floor.
Thank you, Susan. Greetings. How's everyone doing today? I'm sure everybody is EAM delightful. So today I wanted to speak with you about a few compensation updates. Next slide, please. So I'm sure many of you are familiar with this particular type of special comp item called the off salary schedule pay. And the reason I'm bringing it up now is that I know many times that for schools in particular that we see off salary schedule pays normally reported in April and May. So these last couple of fiscal years, we got inundated with tons of different off salary schedule pay reviews that ended up delaying quite a bit of retirements. And unfortunately, quite a few of them were also considered non-compliant. So that required us to remove the special comp type, have the schools fix the payroll so they get the contributions back, and then let the members know we weren't including them in the retirement. So I thought it'd be a good idea today just to get everybody primed and ready for when it's OSSP reporting season, that you're reporting something that is true and compliant to the law. So that way members know what they're expecting to get in their retirement. So compensation in addition to a base salary paid in similar lump sum amounts to a group or class employee. So this is from the law. This is straight from 571, our list of 104 different reportable special comp items. These payments are routinely negotiated through collective bargaining in lieu of increases to the salary schedule. So basically what that means is that you can only report an off salary schedule pay in lieu of a pay increase. So if a member received any type of pay increase, now I'm not talking about an MSA, I'm talking about a negotiated pay increase for the whole group or class. So if there's even a 1% pay increase, OSSP is not reportable to CalPERS. Next slide, please. this is a little bit further on what the regulation says. These payments are based on a similar percent of scheduled salary not to exceed 6% per fiscal year. So again, on this one, to make it compliant, it can't exceed 6%. So if you have an OSSP for 7% or greater, you have to limit it down to 6%. And keep in mind, if there was any other pay increases, not talking about MSAs, merit salary adjustments, but an increase to the salary schedule through a negotiated pay increase, it's not reportable whatsoever. And then the law goes on to read, the contracting agency or school employer may adopt similar action for non-representative groups or classes of employment as are negotiated through collective bargaining agreement. So, that basically is the regulation. So to recap again, if there's a negotiated salary increase, you cannot offer up any percent of the off salary schedule pay. Off salary schedule pay can only be limited to 6%. Next slide, please. So reported in lieu of a salary increase cannot exceed 6%. One key note as well is it can actually be a flat amount. So say like in your MOU or your labor agreement, you negotiate for a flat amount. We're okay with that. That's compliant for the MOU. However, when it's reported, we're going to make sure that one, it's reported as earned. We don't want it reported as a lump sum. It has to be spread out over the fiscal year or year that it's intended for. And that flat amount at the end of the day cannot exceed 6% of that full-time pay rate per month. Next slide, please. And again, what can't be reported, I just mentioned it, a lump sum. I know that the reg says it's a lump sum. However, you cannot report anything to CalPERS as a lump sum. Per the law 20630, all compensation items have to be reported as earned. So if you have a legitimate off-salary schedule pay that's compliant with the regulations, you can report it as a one-time payment, as a lump sum. However, you need to use the retro special comp transaction on your payroll reporting. That retro special comp transaction will let you to report the lump sum, but then spread it out over the months it was intended. So for example, it could be June 30, 2023 to July 1, 2022, whatever the case might be. So you can't just report it as a one-time lump sum. These last couple of years, we've seen a ton of these where we saw the lump sum reported. Our system is designed in such a way to where, one, if you try to report payroll now and it's a lump sum and it exceeds 6%, it will air out your special comp. However, let's say that you reported it, so A, that will happen, and B, let's just say that you reported it prior to our new payroll rule, that CRB 357. That has those thresholds added into it. If you had reported it prior to that and then someone goes to retirement, we actually have a safety net built into our system as well. So with that lump sums there, we're going to catch it at that point too. We often find with lump sums, what happens is that special comp items will be doubled up and people will have their calculations extend out farther than what they were truly intended. We end up having to do downward adjustments and notifying the employers. Another thing we see quite often, of course, I don't think this will be an issue as much going forward, but the last 2 years in particular, there was quite a few salary schedule pays that were really, truly, when you looked into it, a form of a COVID pay or a COVID stipend. So schools, a lot of employers got additional money for COVID, and as like a incentive to encourage members to retire or to stay on, employers offered up this COVID pay or stipend pay. And then it was just reported under the guise of soft salary schedule pay. So there is no regulation that states that COVID pay or COVID stipend, I've also heard called hero pay, it's not listed in that exclusive list of 104 reportable compensation items. So even if it's reported as an OSSP, we're going to do a deeper dive. We're going to look at the MOU, the labor agreement, and if it doesn't meet the standards of 571 or 20636.1, which is the definition of comp earnable, we'll end up denying it. So just keep those things in mind. We don't want to delay anybody's retirement. We don't want members to have to pay contributions on something that's not reportable. And then also at the end of the day, every time that we get these, it requires my team to process a full formal denial where the member gets appeal rights, and then they have unnecessary lawsuits sometimes that they'll file against CalPERS on a case that 99.9% of the times is not going to win in court. Next slide, please. So that's all I wanted to say about OSSP. At the end, if you have any questions, we can talk about that. But then I want to talk about something a little more cool. I mentioned this probably last year. I believe it was last year. We actually sent a circular letter out about this as well. We have a compensation reporting webpage. So it's fairly new. It's on the external webpage. It's under the employers. And you can see here on the graphic on the screen, if you click on the compliance and compensation reporting, it's going to take you to this web page. Next slide, please. And that page will have 4 different areas that you can go in and explore and learn information about compensation. We have we have we have all of the compensation laws and regulations listed under the reporting compensation section. Also, some interesting factoids and things to keep in mind when you are looking to negotiate for a special comp item. We also have a section for publicly available pay schedules and all the criteria a pay schedule must meet in order to be compliant with CalPERS. There's actually sample pay schedules listed out there as well. We have sample language for different special comp items that you can use as a guide when you're negotiating for a special comp item, such as like a longevity pay or an education incentive. And then we also have different resources for compliance, such as a link to our MOU review web email address where you can send in any of your documents so we can do a review of your item and determine if it's truly reportable to CalPERS. Next slide, please. And then this one's probably the neatest feature, in my opinion. We have this compensation reporting table. So all the special comp items are broken into 5 different categories: incentive pays, educational incentives, premium pay, special assignments, and statutory. So this table here, you can click on any of those links and then search for the item in question. And then it gives you kind of a window into looking into a high level window to see if that item is truly reportable to CalPERS. So like, for instance, this person on the example on the PowerPoint slide, they selected bonus. You can see it's reportable for miscellaneous, safety fire, safety police classic. And for PEPRA, it's no. My graphic isn't good. It should say no there. This was when we had the prototype of it. And then there'll be just like a handy little note, kind of a high level thing we get common questions on. Like in this example, it says, must have a system in place for evaluating a member for superior performance. So that's one thing. If you have a bonus, it has to have a plan in place and it has to be for superior performance. Next page. So this is the real reason I want to talk about this. And I think this will be huge. It's going to be a really, really useful tool for schools in particular. So I know in other SEAC meetings, we've talked about the school pay rate issue, right? Your pay rate must always be based on 40, regardless of what the schedule is, right? So if you're a 37.5 employee, your pay rates should still be calculated as if you work 40. Your earnings, of course, would stay at the 37.5 per hour or per day, or excuse me, per week. But your pay rate has to be based on 40. It's a super complicated calculation. I remember walking you guys all through that back in our, I think in our August school advisory committee meeting. And, it's gotten confusing. I also know many of you have had audits on this particular topic as well. I've met with some of you on the webinars on this. So what we've decided to do, our team, the audit compliance resolution team, they came up with this really neat tool where you can just plug and play specific information and it will tell you what your hourly or monthly pay rate should be based on that 40-hour equivalent. You'd enter in things such as what the annual earnings are, what the person's schedule is. You enter in like 3 or 4 different criteria and it will actually calculate out and let you know what that full-time pay rate should be to be compliant with 206.36.1. Sorry, I had a hard time spitting that one out for some reason. So I don't have anything to show you on that. It's a work in progress. We're already working with our public affairs team to try to get this updated. Once it is rolled out, we'll probably be reaching out to a few of you to see if you can help us test it. And then if you have any questions or things you could do to help us fine tune it to make it easier, we're definitely open to those suggestions as well. So that's all I had for you guys today. Is there any questions? Susan, I turn it over to you to facilitate this one for me.
Yes, actually, Ramona had her hand up, but maybe she maybe you answered it already because her hand is no longer raised. So at this time, we do not have any questions.
Okay. Well, that's good. All right, well, I'll be back at the end if you think of anything else. And so everybody have a great day, and I'll talk to you again soon. Bye.
Okay, Paul, are you ready? Yeah, there you go.
Hey, thanks, Susan. Good morning, everyone. I'm the actuary for the school's pool, and we in the actuarial office determine the employer and PEPRA employee contribution rates. And since the last time we met, we have updated our 5-year projection of the employer contribution rate. So I'll spend just a few minutes going over that. And just a spoiler alert, it's slightly less cool than what Brad just talked about. Next slide, please. So the projection represents our best estimate of future rates based on what we know today. And we have updated it most recently to incorporate the effect of the fund's investment loss in fiscal year 2021-22. You may recall last year in July that our investment office released a preliminary return figure of negative 6.1%. So we've updated the projection to reflect that investment loss. Now, just a reminder that this does not affect member rates. The investment return does not have any bearing on member rates, specifically PEPRA member rates. And we do expect at this point, we expect member rates to remain the same for the foreseeable future. So the actual rates for 23-24, the employer rate, is in process right now and will be finalized in April of this year. Can we go to the next slide, please? So here are the updated numbers in blue, as well as the prior version of this projection in gray for comparison purposes. Now, the difference in those two lines is the impact of that investment loss that I talked about in fiscal year 21-22. Now, under our actuarial amortization policy, investment losses are ramped in over 5 years, which means that the full effect of it is not immediately hitting your rates. It's phased in or ramped in over a period of 5 years, which is why you can see in this chart that the impact grows. The impact of that loss grows over that 5-year period. I just want to make a few other notes. The first is that the rate that for the year that we're in now, 22-23, of course, it isn't changing. It's at 25.37 you see on the far left. Second, again, I just want to emphasize that these projected rates are estimates only. It's really just our best estimate at this point. Future experience will affect the actual levels of these rates. And so hopefully we get investment gains in the future years to bend this curve back down. I think we've seen that, especially in the last few years, a bit of investment whiplash, if you will, big gains, big losses, and it adds a little bit of volatility to the rates, despite efforts we have in our actuarial amortization policy to try to dampen that or to smooth that out. So let's hope for some investment gains. And just a reminder that the actual rate for next year, fiscal year 23-24, will be set by the June 30, 2022 valuation, actuarial valuation, which we are working on right now. And this will essentially factor in the census data as of June 30, 2022, and experience, demographic type of experience during 21-22. So retirements, deaths, those sort of experience items. Okay, next slide, please. That's pretty much it. So with that, are there any questions? Susan, do you see anything in the Q&A or hands raised?
No raised hands.
Okay, well, if anyone does have any questions, feel free to throw them in the Q&A and I will monitor that for the remainder of the meeting. But if there's nothing else, then we'll move on.
Great. Jonathan.
Good morning, everyone. Jonathan Hensley from the financial office. I want to talk about an upcoming change to the late payroll and late correction administrative fees. This change is going into March, and it's going to be a prospective change. It won't change what's happening right now, but prospectively will be changing the way we're billing. Next slide, please. So this is a CalPERS system change that's entirely throughout the organization to all employers. These slides are to the Office of Education and the school employers specifically, but this is a change to all employers. So currently the CalPERS system bills the late fees to the county offices of education and not who's actually reporting the payroll. So what the change is going to entail is that the functionality will bill the payroll data owner. So if you've given rights to one of your school districts and they're reporting their payroll, they will now get these fees directly. It will no longer go to the county offices of education. Next slide, please. This is going to be consistent with the late retired annuitant fees. The way that we bill those is to the payroll reporter. So we're just trying to get more consistent. So independent reporters will get the bills instead of the county offices of education. Hopefully that will be a change that you will like. It's been requested for quite a while and we finally have gotten it into the system starting in March. Next slide, please. School districts who report directly to CalPERS will now be getting the administrative fees. What we're hoping is this will reduce the questions and inquiries from the county offices of education asking what district does this belong to, whose employee is this, so that we can simplify things for you guys. It's also it aligns better with the payment ownership. I do know that a lot of the school districts do have to request checks from the county office of education, but hopefully they'll know why they need to request these. They'll have the understanding of who was reported late or what period was reported late or what was not corrected. And this is just to streamline CalPERS in the way that we're doing the fees and make it streamlined throughout. Next slide, please. There are resources available. I highly encourage you, if you have questions about your fee, to contact the FAS payroll box. Of course, you can always contact the employer technical support or the 800 number at the call center. And to let you know, I do have a new employee who works on these fees directly. At the time of these slides, I didn't have that position filled. So his name is Nathan 2. So if you get a response from Nathan 2, he is a new employee in the financial office and he will be your direct contact going forward. Next slide, please. Are there any questions on this?
Yes, we do.
All right.
Vina, go ahead.
To start with, thank you for billing the districts directly, but I can't figure it out. How will you know, let's say we have 50 districts and we submit their payroll and we submit their money. How will you figure it out where the fee will belong? Like,
so we will, if the county office of education is still the payroll data owner, unfortunately, that's where the bill will go. It's only if you've made them an independent reporter on their own that will know to bill that district. We don't have functionality to bill districts that aren't reporting to us at this time.
so for the retirees fee, you already know where the employees belong and we still get the fee directly to the county office. One of the things which PERS has to do is that they should have a way to receive the money directly from the district.
The feedback that we got was to follow where the payroll is being reported when it comes to the late reporting of payroll. I can look into future releases at all of the district levels and whether they have accesses and stuff to view the fees and see why the fees are being assessed. But at this time, the payroll data owners are the ones that can see this information.
All I know is it's very time consuming for our office. So we do have to find a new way. Thank you.
Okay, well, like I said, I'll look into what that would entail and we'll work with the employer division to see their recommendations because that's who we partner with when we do these. So we'll look into it in the future.
Okay, and one last thing I wanted to add is every invoice that comes should have a division number on it. And if possible, employee ID and all. It's very time consuming when the invoices, we have to go to Cognos here and there to find where they belong.
Okay,
Thank you.
I'll have that looked into also to see where it's being, where the invoice is being produced from, which system, and see what we can do about that.
Okay, thank you. Thank you.
Thank you, Vina. Nia, go ahead.
Yeah, I have a concern regarding the projected contribution, payroll projected contribution. What I find out lately is my staff bring it up to my attention that if our district don't confirm missing payroll by the deadline, the next day we receive the invoice from CalPERS for a projected contribution. Yes, I understand that. And we paid that invoice and bill the district for that. Now, later on, the district confirmed the missing payroll that CalPERS already billed it and we already pay. Then CalPERS refund that contribution to us. And instead of give us the credit in the current month, CalPERS give us the credit go back to the month that we pay it. And we cannot use that credit to pay any our current invoices. That later on, when there's a projected payroll again, CalPERS will bring that credit to the current month for us to apply it. But the issue here is we don't have any detail with that credit. We cannot apply. We don't know which district belong to, so we can give the money back to the district. So what I'm asking is if any the county office or the district that encounter in that issue, and is there any help from CalPERS for us, because it's really time consuming for us to reconcile and to make the payment, and the $200 admin fee, I understand that, but the projected contribution, and sometimes when we pay that amount, but the refund amount is a different amount, so it's no way for us to trace it. So is there a way to make it a better process to help us with this?
Let me look into seeing what we have available. And when you have questions like that, you can email us at that FRAS payroll email box and we can assist you. I have two dedicated team members that work on this. So I'll see what we have available. I don't know it off the top of my head right now, but I'll have somebody contact you. What district are you from?
I'm from Santa Clara County office.
Okay, I will look up your information and I will have one of my team members give you an email or a call to go over this particular issue and see if we have tools available to you or what exactly we would need to provide that, because I'm sure that you're not the only one that's looking at this way.
Thank you so much.
Yeah, and projected payroll for everybody. If you know that you're going to be reporting the payroll, it will automatically reverse and will take the actual numbers. And if you confirm missing payroll, it'll automatically reverse.
Okay, we have another hand. Go ahead, Tina. Tina, go ahead.
I'm sorry, can you hear me now?
Yes.
Okay. Yeah, I have a question about billing for late payroll and correction fee. About the correction fee, are you talking about the request from CalPERS to correct the, like pay rate, or something that, like they find the issue with the pay line, and then how do you determine the fee? Like for example, you give the time frame up to whatever day to make a correction, but somehow that county office or district couldn't met the correction by that day. Is that how the correction fee assessed?
That I would have to leave to the employer account management division because that fee isn't one that the financial team owns to bill. We do the accounting for it, but let me try and get that information and make it available to you.
Okay.
But I believe it should be billed monthly, and I think it's 30 days after the error happens in payroll, and then that fee is assessed.
I see.
And I believe it's by line, but
Okay,
I'll find
so
out.
another thing is when you're talking about independent reporter, so those so that you mean that the school district that submit the payroll data directly to CalPERS, if they have a late payroll or late correction, then CalPERS send the fee directly to those independent school district. But any school district that county office submit the payroll data for the school district, then any late payroll or correction will bill directly to county office. Is it correct?
That is correct.
All right, thank you. And that's all my question. Thank you.
Thank you, Tina. Okay, that's all for raised hands. However, there are several in the Q&A. Would you like to answer those live, Jonathan?
Let me see.
The first one is, will the County Office of Education get a copy of these bills?
No, the bill is only going to go to one reporter, so it'll go to the district. We didn't want confusion in having the county pay the ones. Now we're billing to the districts.
Okay.
And
Is it possible to run a report by fiscal year to see by district what fees have been charged and paid by employer? Our reporting is done by COE.
I'd have to look into that. I don't know if we have a specific report that does that by district or by reporter. You can always contact my team and we can look it up for you and we can provide reports.
Okay.
And Cynthia did help me out. The late payroll correction is by report, and it's when it's suspended with errors and not resolved within 60 days from the end date of the payroll period, and the fee is $200. So it's the report.
Great, thank you, Cynthia. Looks like, can the late payroll invoice that is generated due to lines not being cleared in the retirement reconciliation module include the member's name and member's ID that was pending that caused the invoice to be generated?
I will have to look at where the invoice is generated out of to see if that information can be added, but we can take that for a future enhancement.
Okay, and then I think the rest of these we can answer offline as well.
Yeah.
Okay, next up is Stephanie Duncan.
Good morning, everyone. My name is Stephanie Duncan, and I'm an employer educator at CalPERS. I wanted to highlight a variety of educational options that we have for our school employers. Sometimes we're asked, do I really need to take these classes? The answer is yes, we hope you do. Next slide. So our educational opportunities are online classes that you can access 24/7. They are self-guided. We have instructor-led classes, which is my unit. We offer classes virtually, in person. They are live and interactive. We have classes for business rules and my CalPERS. And lastly, we have our reference guides, business rules and health guides, and our my CalPERS student guides. So let me talk about these in a little more detail. Next slide. So this is how you're going to find the online classes. When you log into My CalPERS, you click on the Education tab, then click on the Classes link, and from there you can choose the online classes options. These are the ones you can access 24/7. They'll have single topics that you can start. They're about an hour, sometimes a little less. Next slide. There are a variety of classes that you can choose from. On the left-hand side under membership, one example is the school membership class, specifically for your audience, your group. On the right-hand side, I got a little arrow there pointing out our new Certify a Leave of Absence Service Credit Purchase Request online class that you might want to check out. Next slide. We also have classes with live instructors, as I mentioned. Our retirement business rules class covers things like school benefit provisions, reporting overtime and stipends, reporting leaves of absence and permanent separations, and even go over CalPERS and CalSTRS election. Then our health business rules class cover a variety of topics, including health enrollment self-service option, the health enrollment eligibility, and health benefit officer roles and responsibilities. Next slide. We also have advanced classes. Our advanced compensation reporting class goes over compensation reporting compliance, pay schedule compliance, and compensation limits and reporting. And then we've added an advanced membership class where we go over employment certification and what you need to do online in My CalPERS. We talk about multiple positions for the same county office of ed and overtime positions. Then we also have additional information about CalPERS, CalSTRS election for substitutes based upon the executive order. Next slide. Our My CalPERS training has a variety of classes to help you learn more about how to process transactions and navigate through My CalPERS. You can learn and master how to report retirement and health enrollments, run reports, process payroll, make accurate payroll adjustments, along with many other transactions in My CalPERS. And students will receive logins to the training environment and fictitious data to follow along with instructor practice scenarios. These are held in person at regional offices in a small computer lab or virtually with a live instructor and range from 1 to 3 hours. Next slide. The classes include our retirement enrollment, health enrollment. They can attendees can learn under retirement enrollment how to verify membership, create appointments, health enrollment. They can key health enrollments and view enrollment details. Next slide. And we also have specialized courses that include payroll reporting, shows you how to create, modify, submit a payroll record, reconcile an earned period report. The payroll adjustments class shows you how to view posted payroll, understand the difference between different adjustment types and how to use that to maintain payroll records. We also have a Cognos class that shows you how to run Cognos reports, such as posted contributions detail report, certificated member report, and the separated retirement reconciliations appointments report that will display appointments that have had unposted payroll for 6 months and are now being permanently separated in My CalPERS, as we've talked about earlier. Next slide. You can find a list of our classes by just going to the CalPERS website, calpers.ca.gov, clicking on the employer tab at the top, and then under the left-hand column, I want to, it'll have a link for attend training and events. Next slide. From there, you'll see a list of employer education. You can scroll down, next slide, and you'll see our classes and workshops, including business roles and My CalPERS. You'll have a link to log right into My CalPERS to sign up for those there. Next slide. We also have customized classes for you. So if you contact us and say, we would love to have a CalPERS representative come and give our staff employer education, we can come out to your site, whether it be a district office or county office. We will have presentations customized just for you. It provides a cohesive message. You can gather staff from all district offices, perhaps. So if you're interested in either a business rules class, a My CalPERS class, contact us at the email that's listed there on the screen. Next slide. We also have the My CalPERS student guides, which you can access again on our website. Next slide. You'll find the My CalPERS student guides on the Student Guides and Resources webpage. And if you scroll down, next slide, you will find a list of topics to choose from. We have a variety of topics. They give you step-by-step instructions on how to do things within the My CalPERS system and include screenshots from the system as well. Next slide. One guide you might find helpful is the My CalPERS employment certification functionality that you can find under the retirement heading in case you need that. Next slide. Finally, we've got our reference and health guides under the employers tab, policies and procedures link. We have not only for reference, but also for retirement information, for payroll information in the reference guide, but also for those of you who contract for health, we have our health benefits guide. Lastly, next slide. If you are interested in having member education, you want someone from CalPERS to come out and talk to your employees about retirement, that is member education. That's not us. So please call 888-CalPERS to set those up. They will contact our regional office staff and they can set those up for you. Any questions?
Yes, we do have a question. Tina, go ahead.
I'm sorry, I maybe hit the wrong key.
Oh,
I don't have a question.
okay. Looks like that was it.
Okay, thanks.
Thank you, Stephanie. So at this time, Renee and Brad and Christina and the rest of the panelists are available to answer your questions. Please submit your questions either in the Q&A box or the raised hand feature. Let's see, do we have any questions? We've got 2 raised hands. Ramona, go ahead.
Good morning. So my question is regarding the ES 372 right of election members. So they're in a certificated capacity and they've elected to retain their CalPERS membership. When it comes to the certificated salary schedule, as far as compliance and what is reportable, is everything that would be reportable to CalSTRS off of that salary schedule reportable to CalPERS?
The answer is no. And that goes with any, so STRS is similar to like a reciprocal agency to CalPERS. They have reciprocal type of benefits, but we apply the same rules as we do to CalSTRS as we do for reciprocal members. So that means that in order for any type of compensation item to be compliant with CalPERS, it has to meet 20636.1, which is comp earnable for schools, and 571 for the special comp items. So for instance, if you have a salary schedule that was okay with CalSTRS, but it doesn't meet the requirements listed in 570.5, such as things like position title or special comp that's included in pay rate or referencing another document, those are things that just aren't compliant with CalPERS. Now, oftentimes we can work with an employer, like if someone goes to retire, and if we have little minor infractions there, we normally can work with you to get that salary approved, but just know that if it's not compliant and it's a continuing issue, it can create problems down the road. And always, if it gets audited by the Office of Audit Services for salary schedules, that would be a guaranteed finding if it wasn't compliant with 570.5. So in short, certificated or not, the members still have to meet all the criteria set forth in our laws, and that includes the pay schedule as well.
Okay, so when it comes to the certificated salary schedules, typically the advancement is based on your education. So your column 1 is your basic education. You move to column 2 with the additional education, and each column is based on hiring your education, which could include things like your master's degree, things like that.
Okay.
But it's the salary schedule cell.
So is it a special comp item? Is it part of the regular pay rate?
It's part of the regular, right? So it is. So
Is it-
all
is-
of the step advancements are based on education. The ranges, not, I shouldn't say steps, because you can be in that first range and each year you move up a step. But as you go up the salary schedule and range, it's based on the additional education that you are obtaining, that you're required to continue obtaining.
So there, to me, it almost sounds like you'd have a position and then you'd have different ranges based off of the different types of education that they have, correct? And it's just part of their pay. You know, Ramona, on situations like this, I don't like to just speak freely offhand on it. I have
Right.
to see it. Is this the one that you sent us the other day?
Well, it is, but it pertains to all
Yeah,
of your
true.
teachers. So that's why I thought I would go ahead and bring it up here. Yes, but yes, it does pertain
Yeah.
to what we sent.
But yeah, you know, I could see that potentially being a solution, you know, on that particular piece of it. You know, it just one of those things where we're gonna look at it, we're gonna see, is it available to everybody in the group or class? You know, maybe we have to have those types all sectioned off different positions for those different types, depending on the education level. You know, there's all these different solutions that we can look to. But yeah, you know, still what I said stands, you know. The pay schedule itself has to meet all the criteria in 570.5.
Okay.
And I don't believe that was in the determination that we sent earlier today, was it? I thought that it was more about the items I just mentioned.
It was about the
Can't reference another
ranges.
document.
It was, well, no, it had to do with the ranges, because each range is based on education. Because you have your basic, which is your first year teacher with their basic requirements. And then the next range up would be additional educational units. And then again, additional education gets you the next range up until you top out.
Okay. Yeah, it's just too specific for me to speak freely on, to be honest with you. So I'll have to wait. We'll have to talk about it after the school
Okay.
advisory committee, like we discussed earlier.
Okay.
Okay, thank you, Ramona. Stephanie, we have a class question. Will there ever be a class that goes through completely on the process of reporting service credit prior to membership, since we now have to do that through the CalPERS site?
There is a student guide. We don't have a class. I can definitely bring that up to my manager to see if that's something we want to do. But I think that the service credit unit likes to handle a lot of the questions and information that's given out, but I can look into that for you.
And to add on to Susan, if they're talking about service prior to membership, that could end up in an arrears. I'm not sure, because that happens a lot. So they could be talking about the arrears certification process and so forth. We're not going to be giving a class on that, but like Stephanie said, we already have on our website student guides and walkthrough procedures for employers to use. If they're talking about service prior to membership, that ends up, like I said, going through the arrears automated process.
Great. Thank you, Christina. Okay, we have a question regarding ES 372. Brad, is that you? No?
Actually, no, I have no idea what that is.
Oh, okay.
That's Christina's side of the house.
Regarding ES 372, there are comments on here about subs and the right to the ES 372. Subs don't require mandatory enrollment in CalSTRS, right? Please elaborate.
Mandatory enrollment into CalSTRS. If they are eligible for CalSTRS, they would have mandatory enrollment into the CalSTRS system if they've already established membership with STRS.
Yeah, thank you.
So if an employee is currently a PERS member and they have been hired to be a sub teacher, can they still remain in PERS?
Possibly they could. So there is a possibility they could stay. We'd have to look at the election. We'd have to look at the position, but yes, there is a possibility that they could stay. Yes.
Okay, and then Ramona had a comment. So I think it looks like those are it for now. Ramona, did you raise your hand or is that from the other time? Ramona?
Sorry, that's just residual leftover. I will raise my hand.
Okay.
Thanks.
Lori, go ahead. Lori, it says you're unmuted, but we can't hear you.
Sorry, technical difficulties.
Oh, there you go. All right, then that's it with raised hands. It looks like we had a couple more come in. We're answering those as I speak, it looks like. Here's one. For PERS members who accept a certificated sub position, should we submit the ES 372 for CalPERS determination if position qualifies to stay in PERS? And you're muted, Christina.
The answer to that question, sorry, I was looking at the chat to try to mute myself at the same time. The answer to that question is yes, they should. So they should, I'm sorry, should submit the position, all the information to us to make a determination.
Okay.
And I know there's a couple other questions. My team is typing.
Oh, okay.
So
okay, they're being answered.
They're answering. Yep.
Okay, great. It looks like we have another raised hand. Deepa, go ahead.
Hi. I want to just touch the ES 372 election form for subs. And the can of worms that was opened up years and years ago. And finally, the conclusion was if an employee is not mandated into CalSTRS membership, then they would not have a right of election. So for, all these questions back and forth about a sub having membership in CalSTRS and CalPERS, having the right of election for CalPERS and having to submit the ES 372 is opening up a lot of confusion again for us as employers, because we can have a classified employee who is a member of CalPERS, and then they get hired to teach a class at the college here. They're not mandated into CalSTRS at that time. Or
Correct.
if we have let's say we have but if they could have CalSTRS membership from another college, like they have chosen because they've been teaching somewhere else, they've established CalSTRS defined benefit membership, and then they also decide to teach a class at this college. But at this college, if the membership is not mandatory, then they have the right of election. They wouldn't be mandated they wouldn't require the election. So this whole topic is getting, I think we need to make sure that we all understand that there's clear guidance from CalPERS on when they want to see the ES372s, because if CalSTRS is denying that there is a right of election, then does PERS overwrite that?
Okay, so yeah, I understand that, but for us, we're following the law, and the law states for us that if a member is vested under CalPERS, but they're employed by a school employer, or I think it says a state Department of Education, with 120 days under a CalPERS cover position, and that new CalSTRS position mandatorily qualifies for CalSTRS membership upon hire. The member at that time, they would be eligible for the ES372 election form, and they could remain in CalPERS. So that's our fairly new legislation, and that's what we follow. So we follow the law. So we're already, I think we're pretty clear on what our path is. That is our path going forward.
And I get that, because that's the law that we've been following too. That was explained to us when the ES372 was discussed in so much detail. And again, the key is, are they mandated into CalSTRS, right? I understand if they're mandated into CalSTRS for that work, and if they have CalPERS membership, they would have the right of election. But a sub is not always mandated into CalSTRS.
Okay, yeah, I can't answer what about CalSTRS and what they're denying, but that's the law that we follow for determining membership on our end.
Okay, we have a question from Debbie. Debbie, go ahead.
Good morning, everyone. In looking at the questions in the chat, I saw that somebody had asked Brad to clarify the 6% that he was talking about. And the question was, if we offer an on-schedule pay increase that is negotiated and it's greater than 6%, is it not reportable? And the answers seem to be flipping back to off-schedule pay 6%, on schedule not. So I just wanted to have some clarification so everybody could hear, because we have a lot of districts that are negotiating like 8-9% increases on the salary schedule.
That's if it's a regular salary, if it's a salary increase and it's for the pay schedule, it's not a one-time off salary schedule pay, that's fine, as long as it was all adopted appropriately and put in the pay schedule correctly. That's okay. There's no limit on schedule. Just off salary is limit to 6%.
Perfect. And they also can't have the increase to their schedule and get a 6% that's also PERSable, correct, in the same year?
No. So if you can't get an on schedule increase and an off schedule in the same year.
Right.
No.
Okay. I just wanted to have that clarified because I saw it kind of going back and forth.
Okay. My bad if I wasn't clear on that. No.
No, you were. It just looks like some confusion in the chat. So I just wanted to bring it up so that you could, during this time, set the record straight. Thank you.
No problem. Anytime.
Thank you, Debbie. That's it for raised hands. Looks like that's it. So if you think of additional questions after we end, please feel free to email them to either one of the resource email boxes that were shown on the screens today, or you can email them directly to us at CalPERS_SEAC at calpers.ca.gov.
One thing I wanted to mention before we logged off, Susan, is that this will be my last school advisory committee in this role. I accepted a new position at CalPERS in our customer employer outreach division, and that will start on March 3rd. If you have any questions going forward, you can always reach out to the MOU review mailbox, like I mentioned earlier. And then also we have two managers that work in my area right now. Ken Noss, he's relatively new. He took over for Kevin Lau. He handles all the MOU review and audit compliance questions. And then also we have Francis Warden, who oversees our comp review area. So any questions that have to do with composition review or MOU, hit those two up. And then last and not least, if you have questions about the lifeblood of CalPERS payroll. I think you guys already know who to reach out to, but it's the same people as always, Cynthia Brown and Carlos Velasquez, the two most loved people at the Ed Forum. So anyhow, it's been a pleasure working in this role with you guys for all these years. I'll always be there for you if you need help. And I'm sure in my new role, our paths will still cross. Thank you. And
We're
thank
going
you
to
for all
miss
the
you,
kind
Brad.
words.
Good job, Brad. We're going to miss
Thank you. Thank you.
So we'll be sending out a report after probably tomorrow or later in the week that shows all the questions and answers that were submitted during the webinar. Also, as soon as the webinar ends, you'll receive a survey. So we encourage you to complete that and submit it. And we just want to thank our presentation team today for passing along such valuable information. And then also a thank you to you, our school employers, for your questions and comments as well. And as always, STIRS will be hosting the afternoon session, and that begins at 12:30. And you can log on to the STIRS website to join their meeting. So that's it for us. We do appreciate your time today. And so thank you again and have a great afternoon.